Hello everyone. Today marks the release of our first annual results as Valterra Platinum, and I'm pleased to walk you through the key highlights of what's been a transformative year for the business. As you know, safety comes first. Tragically, we lost 2 colleagues in 2025. Our deepest condolences go to their families and colleagues. Their loss reinforces our responsibility to prevent repeats. After conducting detailed investigations into the causes of both incidents, we've implemented corrective measures and strengthened our critical controls to ensure such events are not repeated. Despite these tragedies, several of our operations achieved exceptional safety records, which deserve recognition. Mototolo and Tumela mines reached 11 million fatality-free shifts, while Mogalakwena achieved 24 million. Our total recordable injury frequency rate improved by 11% to 1.48, our lowest in our history and among the best in the ICMM peer group. I'd like to thank every member of the Valterra Platinum family for keeping yourself safe and being your brother and sister's keeper. We still have a great deal of work to do to achieve zero harm, and we have to remain relentless in implementing the actions to achieve this. So turning to the external context, the PGM dollar basket price climbed 26%, ending the year at $1,852 per PGM ounce, and underscoring the shift in market fundamentals. The Rand PGM basket price increased 22% to 32,611 Rand per PGM ounce. We expect solid market fundamentals to continue supporting PGM prices over the medium to long term. Against this backdrop of higher PGM prices, we've achieved several significant milestones as an independent company. We completed the demerger from Anglo American plc, we launched Valterra Platinum's brand, and secured our secondary listing on the London Stock Exchange. We've also made great progress in establishing our standalone operating model. We formed an independent and diverse board and implemented a more simplified management structure. Despite this scale of transformation, we've remained focused and delivered on our strategic priorities. With our new structure firmly in place, we delivered stable and consistent operations, meeting or exceeding our production and cost guidance. We've strengthened our safety performance and embedded a stronger focus on operational excellence and cost discipline across the entire business. This was clearly demonstrated in our response to the flooding incident at Amandelbult, where the resilience and professionalism of the Valterra Platinum team enabled the operation to return to a normalized run rate ahead of schedule, ultimately delivering volumes ahead of our guidance. We've materially advanced our growth and operational efficiency projects while maintaining our focus on capital discipline, effective project execution, and ongoing cost optimization. Operational performance improved significantly in the second half of the year. Production volumes increased by 18%, resulting in total methylene concentrate production output of 3.2 million ounces for the year, down 10% year on year, but above our guidance. Refined production decreased by 13% to 3.4 million ounces, but exceeding our guidance, driven by lower M&C volumes, partially offset by a release of work in progress, albeit smaller than the release in 2024. PGM sales volumes were 3.4 million ounces, consistent with our refined output. The second half momentum gives us confidence for the year ahead. At Mogalakwena, the Sunsplit Underground project is progressing well. We completed the pre-feasibility study and continue the advancement of the ore reserve development, keeping us on track to finalize the next phase of studies and make an investment decision in the first half of 2027.
In 2025, we exceeded our cost savings target of 4 billion Rand, delivering 5 billion Rand in savings for the year. This brings total operational cost savings over the past 2 years to 12.3 billion Rand, more than offsetting inflation over that period. Cash operating costs were 19,488 Rand per PGM ounce, in line with our revised guidance. Our all-in sustaining cost was $987 per 3E ounce, flat year on year, reflecting sustained cost and capital efficiencies, as well as higher co-product revenues. EBITDA increased by 68% to 33.4 billion rand, driven by a 22% increase in the rand PGM basket price, the delivery of cost savings, and the 2.5 billion rand received in flooding-related insurance claims. These gains were partially offset by 15% lower sales volumes and 2.1 billion rand in one-off demerger-related costs. Headline earnings per share increased by 98% to 63.48 rand, primarily due to the 13.6 billion rand uplift in EBITDA. The balance sheet strengthened on the back of robust free cash flow generation. Valterra Platinum ended the financial year with net cash of 11.5 billion rand, a substantial improvement from the 4.9 billion rand net debt position at 30th June 2025. Our liquidity headroom of 43 billion rand underscores our commitment to maintaining financial flexibility and a resilient balance sheet. As a result of the strong financial performance, the board has declared a final dividend of 11.5 billion rand. This is well above our 40% of headline earnings payout policy and demonstrates our continued commitment to delivering market-leading shareholder returns. The dividend comprises a base dividend of 23 rand per share and a special dividend of 20 rand per share.
As an independent company, we're committed to integrating sustainability into everything we do. And I'm proud to share that with Mogalakwena achieving an initiative for responsible mining assurance accreditation score of 50, we're now the only PGM producer with all its mining operations IRMA accredited. Valterra Platinum has delivered across all its key strategic priorities in 2025. We've strengthened our fundamentals, maintained disciplined operational and financial performance, and positioned the company to accelerate delivery of our growth projects. Our balance sheet is strong. We've well-capitalized assets and continue to commit to integrating sustainability into everything we do, which places us in a robust position to deliver attractive shareholder returns through the cycle. Our metal in concentrate and refined guidance for 2026 remains unchanged at between 3 and 3.4 million PGM ounces. Our cash operating unit cost guidance is between 19,000 and 20,000 rand per PGM ounce, reflecting a partial inflation offset from ongoing cost-saving initiatives and an increase in production from Amandelbult. As we continue to invest in our business through the cycle, capital expenditure for 2026 is expected to be between 17 and 18 billion rand, about 1 to 2 billion rand lower than what we previously guided for 2026. This decrease reflects our new way of operating through effective prioritization, spend optimization, and disciplined capital allocation. And finally, our all-in sustaining cost is expected to be approximately $1,050 per 3-year ounce. We move into 2026 with momentum, clarity, and an unwavering commitment to creating value for all our stakeholders. And I look forward to presenting our next interim results as we continue to deliver on our commitments.